Well, FY24 has seen the highest profitability in the banking sector, coming in at rupees 3.2 lakh crore, which is up nearly 14% on a YY basis. Now, this number is after accounting for HDFC Twins merger. Please note that. So, profit growth for the private banks is not comparable YY due to this merger of HDFC Limited with HDFC Bank. Treasury gains and robust fee income actually aided in profitability in Q4 FY24. Asset quality continued to improve, hence lower credit costs also aided in the earnings momentum for the banking sector. FY24 profit growth for PSU banks was about 7.9% YOY, while that of private banks was 19.4% YOY, which includes the HDFC Twins merger. Let's now look at the Q4 FY24 performance of the banking sector. PSU banks have had an amazing Q4 FY24. Sequentially, their net interest income growth was at 4.7%, which compares to 3.4% recorded by their peers, that is private banks. Dhanlaxmi Bank is the only lender to see YOY and quarter-on-quarter decline in its NII. Operating profits of the PSU banks have grown at a robust 16.7% sequentially versus 12.9% sequential growth that you saw for private banks. Overall, operating profit growth of the banking sector was at 14.7% quarter-on-quarter. Now, 9 out of 42 lenders saw operating profit decline YOY and quarter-on-quarter. For 50% of these lenders, the employee expenses weighed on the operating profits. Now, Dhanlaxmi Bank again is the only lender to report an operating loss in Q4 FY24. PAT growth has been robust for PSU banks. PSU banks, the profitability has grown more than 40% sequentially versus 6% sequential growth that has come in for private banks. Overall, banking sector's PAT growth was about 20.3% sequentially. 4 lenders saw their PAT decline both YOY and quarter-on-quarter, which includes AU Small Finance Bank, Bandhan Bank, Karnataka Bank as well as South Indian Bank. Lowest profitability or the return on asset was seen for Bandhan Bank. Now let's look at the asset quality. Slippages increased massively for PSU banks compared to that of private banks. Slippages increased 15.5% quarter-on-quarter for PSU banks, which was largely led by agri as well as MSME segment. So slippages declined more than 4% quarter-on-quarter for the private banks. Overall, slippages increased more than 5% sequentially for the banking sector. Now, asset quality overall for the banking sector is perhaps one of the best that you are seeing in last 9 to 10 years or even more. Interestingly, the net NPA ratio difference between PSU banks and private banks is now down to 27 basis point only, which is perhaps the lowest ever. In FY18, this gap was around 552 basis point. Now, lenders whose risk weight assets have outpaced the growth of loan growth that they saw in the balance sheet YOY and quarter-on-quarter are Bank of Maharashtra, Canara Bank, CSB Bank, Equita Small Finance Bank, IDFC Bank, Karur Vysya Bank, Kotak Bank and Ujjivan Small Finance Bank. Now, HDFC Bank's numbers are not comparable YOY, but sequentially, that is quarter-on-quarter, its RWA growth has outpaced the loan growth. Outlook in terms of what analysts and lenders have mentioned is that loan growth rate will decline in FY25 when compared to the growth in FY24. Net interest margin can come under pressure in the near term owing to their high deposit rates. Some banks can see treasury gains owing to decline in 10-year GSEC, especially in Q1 FY25. Credit cost as well as asset quality will rise owing to normalization of them in FY25. Recovery and upgrades in FY25 will not be as high as they were seen in the last couple of years. Microfinance loans and small ticket unsecured loans have started to see defaults or rise in slippages.